All right, are we ready to start? Is there a start button, or we'll just go? Great. Hi, my name is Eric Novak. This panel is affordable housing finance, the debt layers of project financing. My name is Eric Novak. I'm president of Praxis Consulting Group. Praxis, we are development finance consultants. We help for-profit, nonprofit, and government agencies develop and finance affordable housing. Since 2005, we've directly secured the financing for and closed 85 affordable housing developments, primarily in Nevada, totaling 8,600 units and over $1.6 billion of financing. We want to first welcome those in attendance and those viewing online, or those who may have just tuned in. Joining me on stage, we have Amy Mandell, who's a relationship manager at Wells Fargo Bank, Mike Hemmens, Managing Director of Citi Community Capital, and John Juarez, Senior Community Development Loan Officer, NewWest Community Capital. Also joining by Zoom, we have Michael Holliday, who's Chief Financial Officer at the Nevada Housing Division. All have a long history of providing debt financing to affordable housing projects in the state of Nevada. Here's the format of this afternoon's presentation. First, each of the panelists is going to give a short presentation about themselves, their organizations, and the debt products they offer. That should last around 30 minutes, leaving another half hour to 40 minutes for questions. Please hold your questions until that period. For those joining on Zoom, please submit your questions to the moderator. For those in the audience, we'll restate your question in the mic so that the people on Zoom can follow. First, we wanted to, before moving to the panelists, we wanted to get a sense of our audience. This will help our presenters better tailor the presentations. Who in the audience consider themselves beginners when it comes to affordable housing finance? Say you are starting your first project or have a cursory understanding. Please raise your hands. Great. And who in the audience believe they have a good grounding in affordable housing finance, have been in the field for some time, have taken part in one or two transactions? Okay, so it's about a third. And then who in the audience consider themselves affordable housing finance nerds, that they've done multiple complex transactions, they possibly run pro formas in their sleep? Great, so there's some of those. Give you a sense of who you're talking to.
I don't do that.
What's that? So first I want to introduce Michael Holliday, and I do have a bio here for him. They're in the, sorry, I did have it open. I'm going to let Michael introduce himself because I can't, oh, there it is. Got it. Sorry. Michael Holliday has over 30 years of accounting and finance experience in the public and private sectors. Michael has overseen the issuance of $980 million in multifamily housing finance bonds and over $200 million in single-family tax-exempt financing in his tenure as CFO at the Nevada Housing Division. So welcome, Michael.
Thank you, Eric, and good afternoon, everyone. And I wanted to take this opportunity to thank the Nevada Housing Coalition for putting together such a great event, and for inviting the division to be part of the event as well. A little history on what the division is and what we do in the state of Nevada, because our name is Nevada Housing Division, and sometimes people assume that means we're everything housing. And we're actually not. Since 1975, the division was created to be the state's housing finance agency. We're tasked with creating affordable housing opportunities by leveraging state and federal funding sources and financing to address the shortage of safe, decent, and sanitary housing options throughout the state for persons of low and moderate income. And so much like the other folks that I'm such a great panel, and I'm honored to be with these folks, is that we all offer different tools to create affordable housing opportunities for Nevadans and our partners here across the country, actually. Common types of debt financing, or layers of lasagna that we like to refer to, that the division does, are tax-exempt bonds, which actually generate 4% low-income housing tax credits as well. The division does home funds that actually in Nevada have a unique character in that they generate a property tax abatement for affordable housing properties. We also have state affordable housing trust funds, federal national housing trust funds, and then we have a state-run growing affordable housing gap financing program. Each of those different sources can be used for debt financing in a layer of a project, and sometimes we have almost all of those in a project if it gets very, very complicated. So I actually oversee the taxes and bond program for the state's housing finance agency. And Eric had asked me to talk a little bit about how do you apply for that? If you're a new developer and you're interested in building affordable housing, how do you get started and how do you kind of participate in the tax exempt bond program? So the first step, and when I talk to developers on the phone who are new to the affordable housing development world, I would say is you start with a local jurisdiction. The partnerships that we have with the jurisdictions are extremely important. They often put in a lot of layers of debt or soft financing of some kind into projects, sometimes home funds, depending on where you're located, where your project's located in the state of Nevada. They have other soft funds that they can sometimes bring to the table. And most importantly, for the tax exempt bond program, you really are going to the jurisdiction to ask them for an allocation of private activity bond cap, which is kind of the engine behind the tax exempt bond program. Every year, without going into detail, the IRS provides each state with an amount, a cap for private activity bonds. It's not dollars, it's not money, it's just the authority to issue bonds. And in the state of Nevada, 50% of that allocation every year goes directly to the local jurisdictions. So the developers, we request you work with the jurisdiction where your project's going to be based and have them commit 50% of the bond cap that you need for your project. So for example, if your project needs $38 million in tax exempt financing, we would ask that you get half of that from the jurisdiction, and then the division would provide the other half to come up with the full 38 million. In instances where a jurisdiction doesn't have enough cap or where they've already allocated their cap for the year, they can provide a letter of support. And if the division has enough warehoused bond cap built up, we can actually provide the entire amount or whatever the shortfall is. So after you work with your jurisdiction and you've got your home funds and your allocation of bond cap from the jurisdiction, and basically you have their buy-in that the project is something that they want in the community, you would actually apply to the division. And unfortunately, due to some of the changes and requirements about how we post things on the website, we've had to pull the application off of the website. So you can actually contact the division directly. The contact information is at housing.nv.gov. Again, that's housing.nv.gov. And you could go to program multifamily and the contact information is there. Then I would provide you the application, and then the steps really are, there's quite a few things that you have to submit with an application, as you can imagine, most of them to do with the sources of funding that you're bringing in your capital stack for the project. And then we, in concert with our financial advisor, actually underwrite the application, review the application, make sure it meets all of our statutory requirements. And then the next step would be that we take your project to the Board of Finance, the State Board of Finance, which is made up of the governor, the treasurer, state controller, and then 2 at-large members who are from the finance or affordable housing community. And they generally meet every other month in the state of Nevada. There are some differences at the end of the year where there's a gap through the holidays. And what we need to see is that we like to have an application in about 90 days before the Board of Finance that you'd like to go to. That way we have time to review it. We work very, very closely with the treasurer's office who oversees the Board of Finance to answer questions and try and make that process as smooth as possible for the developers, and make sure that we're taking things to the board that have every chance of being approved and being able to move forward. So in addition to the tax exempt bonds, one of the programs that the state has is a growing affordable housing program. We created that in 2014. There had been about a 9 or 10 year gap in the state of Nevada where we hadn't done any new construction bond deals. And it was because there was this financing gap, where they would put together all the resources they have and they would still be short, a little bit short to make a project pencil so we could get it to the finish line. So the division actually makes soft loans, which are, subject to available cash flow. So we share some of the risk of the project with the deferred developer fee. And we committed up to $6 million a year since 2014. A project can get up to $3 million for one project, and a developer can get one award per year. been very, very successful. Happy to report that the division has issued $45 million in gap loans, and that's generated 4,260 new units for the state of Nevada. And I would say between 2014 and 2019, possibly even 2020, without the gap program, it's possible that we wouldn't have done anywhere near that number of units without some other source of financing. So it's been a very successful program. We now have a new resource that can be combined with tax bonds, which is the transferable state tax credit. I won't steal anyone's thunder. There's a whole panel on that. It's very, very interesting, and it's such a great opportunity and resource for the state. Thank the legislature and the governor for making that happen. I think it's going to be a real catalyst to developing more units for the state. Kind of to talk a little bit, I want to make sure I'm cognizant of my time, because we have a lot of great folks on the panel. Some recent issues or trends that we've been seeing in the tax exempt bond program. So that's our debt financing program. The structures have, up until about a year and a half ago, were almost always direct placements. There were very few public offerings. Everything was placed directly with a bank. And we have a usual suspect on the panel with me that we're thankful for his partnership in the state of Nevada. But lately, we have actually seen some Fannie Mae and Freddie Mac backed issues and some public offerings. So I think the market is really good. I think there are a lot of opportunities right now for different kinds of financing structures, depending on the way a project needs to be placed into service. From an issue standpoint, I wouldn't say an issue, it's just been a little bit of a learning curve. Jurisdictional home documents have become a little bit longer lead time than they have been in the past. So one thing that we would recommend to developers is to really make sure you're working with the jurisdiction where you need to get home funds, and to make sure that you kind of know what the documentation is going to look like and get started on that as soon as you can. So that way it's not holding up your timeline as we move forward. And just to kind of finish here, I'd like to give everyone the state of the state, so to speak, when it comes to tax and bonds in the state of Nevada, with a little bit of a pipeline update. So in 2021, we've already closed on 5 projects, which is going to preserve or create 785 units of affordable housing for $109 million in tax exempt bond cap. Now, the projects are much more expensive than that. That's just the tax exempt piece. We actually have 4 more projects that have been approved by the Board of Finance, but have not closed on their financing yet. That represents another 769 units, or $144 million. And then we have 6 projects who do have applications in some state in with the division, whether it be a preliminary look or queued up for an upcoming Board of Finance. And that represents another 1,192 units, or $103 million in tax exempt financing again. So the program is very busy right now. The changes, not to go too far in detail on that, but on the 4% floor have made projects more viable that weren't before. So we're seeing a lot more requests, and a lot more projects are coming to the table. Where that leaves the division right now is we have this would be the projects that have been approved or have closed. We have $254 million in carry forward bond cap. And there is potential for another transfer of bond cap in from the Department of Business and Industry from the state. Every year at the end of the year, they can revert bond cap to the division, and there is still a sizable amount that could be transferred into the division to be used for affordable housing. Our average issue amount right now is about $28 million per project, representing 55 to 60% of the total cost of a project. With that, I think I'm right on time, Eric, and I'll turn it back to you. And then at the end, I'll be glad to answer any questions anyone has.
Thanks, Michael. And thank you for the gap funding program was a game changer for the state of Nevada. And we really appreciate the housing division's leadership on that. One other, around the same time that the gap program was introduced, HUD came out with the small area DDAs, which became another really important tool for financing bond finance projects, because we historically, Clark County was a DDA on and off, like once every 4 or 5 years, and you'd have a lot of bond projects that year and then nothing after that. And so when the small area DDAs came out in 2015, that was a big change. Next is Amy Mandell, who's been a relationship manager with Wells Fargo National Community Lending and Investments since 2014. She primarily covers affordable housing developers based in the 7-state region, including Nevada, Oregon, Washington, Utah, Idaho, Alaska, and Montana. Thanks, Amy.
Yeah, thanks, Eric. Can you hear me okay in the back there? Thanks. So yeah, I am a member of the Community Lending Investment Group, which we know as CLI. Wells Fargo has a huge focus on supporting affordable housing. It's a key part of the mission. So our group, CLI, focuses largely on tax credit transactions. So in that space, we offer taxable and tax exempt construction financing and also permanent financing on our balance sheet and through our agency partner, Multifamily Capital, which can do Fannie, Freddie, FHA financing, all the options there. We're also a large purchaser of tax credits nationwide. So overall, we invest about $2 billion in tax credits each year. We make about $2 billion in construction loans each year. And then through our multifamily capital group, we make about 2.3 billion in permanent loans each year. We also have a significant presence in Nevada. We have about 2,200 employees, 102 bank branches, and are doing billions of dollars in residential mortgages and also small business loans in the state. One thing that's kind of unique about Wells Fargo is that we are sort of a one-stop shop for your financing opportunities. You can come to us and get your construction loan, your permanent loan, your tax credit equity, all in one place. For speaking to tax credit financing, our debt and equity groups work seamlessly together to collaborate, have one approver, and just make it a straightforward and simple process for developers. And then another sort of value proposition, because we are a nationwide platform, we have exposure to lots of developers and lots of projects and lots of experiences. So we are able to draw on that experience and offer, tips for something we see in one state to a developer in another state. And we're happy to do that whenever we can. And then as far as, if you're interested in talking to us about financing, we're always happy to do that. We're happy to talk to you early, often, as whenever you have questions during your development process. So I have business cards with me. I didn't make slides, sorry, but I'm happy to give my contact information and speak with you at any time about your projects. Thanks.
Thanks, Amy. And Wells Fargo has been involved in many 9% and 4% transactions in the state and is a big participant in affordable housing here. Mike Hemmens, also a big player in affordable housing in Nevada, has been involved in many aspects of structuring of affordable housing real estate financings, including providing construction permanent loans, securing credit enhancement, conducting due diligence, performing financial analyses, and collaborating with the sales and trading professionals to market securities. Thanks, Mike.
All right, thanks, Eric. Thanks, everybody. How's everyone feeling today? All right. So we are a national affordable housing lender. We generally do about $5 to $6 billion a year in affordable housing lending. That's throughout the country. We have a strong presence on the West Coast, specifically state of Nevada. We've been working with Michael Holliday and his team for I think about 30 years now, actually, and so it's been a good market for us. We've really enjoyed working here. We offer balance sheet lending. That's our primary bread and butter. We also are a Fannie and a Freddie lender as well, which we do use that platform. It's the same group. So the same group here at Citibank does balance sheet lending, Fannie, Freddie work. The balance sheet lending that we do is both construction financing and long-term permanent financing. Construction financing for us is drawdown bonds. So you only pay interest on the amount that you use. We are not a purchaser of tax credits. We were at one point, but we are no longer a purchaser of tax credits. So we work well with Amy and her team, for example. We work with the other banks that do business in the 4% tax credit space. So we work well with other banks. If other banks are providing a construction loan, we're happy to provide a permanent loan takeout. We've created a pretty unique structure here in the state of Nevada to get around the program investment, not to get around, but to adhere to the program investment rule. And that's enabled us to work well with someone like Wells Fargo. And so we're generally seeing a 40-year amortization is kind of like the new standard there. It used to be sort of an exception. I would say now it seems like it's more of the standard. I think, Eric, most of the performers you're running are, you guys just assume a 40-year am. Some, borrowers want to go shorter because they want that smaller balloon payment, and that's fine for us too. Our construction rates and permanent rates are competitive. It depends on sort of the size of the transaction. It's not free, or we don't give away free money. You got to pay it back. But it is attractive rates. We tend to like to call ourselves the folks that are easy to work with. And so, we do try to make it easy. We try not to get in the way. We know that, development is tricky, it's messy. And so we try to just make our process seem easy. Let's see. What else do I want to cover, Eric? Any other points?
Well, I don't know where John Juarez.
I actually used to work with John. So just a point of reference too about how we like John used to be at B of A like 15 years ago, and John and I worked well together. He was doing construction financing and we were doing permanent financing. And again, with Amy and Wells, we're happy to just do a permanent forward. If you don't want to work with Amy's agency shop, we make it a little easier than an agency forward. So yeah.
Thanks. So John Juarez left for a moment. When he comes back, Katie, are his slides lined up for when he comes back? They are, okay. So, but why don't we go right into questions, and then when he comes back, and I have to say that Mike looks younger today than when I first met him almost 20 years ago. I don't know how he does it, because he's actually older than me.
It's the keto diet.
Let's start. What are you looking for in a sponsor? Both of you. Just start there.
You want to?
Sure. Yeah, this is a question I get a lot. Developers will, do you have a minimum liquidity that you're looking for? Do you have a minimum net worth? What should my portfolio look like? We really don't have those kind of metrics or standards. We want to get to know each developer, get to know them in the context of the project that they're trying to put together, and evaluate it that way. So, if you are trying to do a $50 million project, you probably, $1 million in liquidity probably isn't enough, but there are no hard and fast rules from our perspective. We want to really evaluate the project and the sponsor together and see what makes sense.
And I would just add too, it is experience. It's experience, making sure you have the right team. As folks know, construction is not easy. There's always going to be things that need to get figured out, and having that experience and knowledge about how to figure it out, not to be taken advantage of. Those are the key things.
Yeah, and if you have, sorry, I didn't mean to step on your answer, but that's a great point. If you have a really strong contractor behind you, that's built a lot of projects like the one you're thinking about. If you have, maybe you don't have as much experience with development, but you have a development consultant like Eric on board to guide you, that all plays into the package.
Great. Well, are you ready to move into your presentation? Yes. Okay, great. Let me introduce John Juarez. He is a Senior Community Development Loan Officer for NewWest Community Capital, a community development finance institution formerly known as Idaho Nevada CDFI. With 30 years experience in community development and affordable housing loan programs, he leads the organization's lending efforts throughout the Intermountain West region. Thanks. And there's some slides. Slide presentation. There you go. There we go. Great.
Well, good afternoon, everybody. It's certainly a pleasure to be here with such a exciting conference and a lot of good ideas discussed, and to be on such an experienced panel. Mike, I know back in the early 2000s, we did several transactions together. I think I was providing letters of credit, construction period letters of credit. Mike was providing the term financing, and we probably did I don't know, 10 or so projects together that we worked on, but I never met him in person until today. So this was a great opportunity to get together. I'm with NewWest Community Capital. We're a CDFI. Next slide, please. Our mission is to increase access to capital and affordable housing in community facilities, halt community deterioration, and create jobs throughout the economically disadvantaged areas of Western United States. Next slide. As Eric pointed out, we were formerly known as Idaho, Nevada CDFI. We expanded our market area in 2020 to the Intermountain West, covering 8 states, and changed the name to NewWest Community Capital. Somehow Idaho, Nevada didn't seem to fit as well once we went beyond those states. So now we're NewWest Community Capital. Next slide. We invest in social purpose, real estate projects in underserved neighborhoods that strengthens the vision of empowered communities. Next slide. Our impact. These numbers might be a little bit outdated, but we provided over 500 million community serving projects, over 3,400 affordable housing units, and nearly 7,000 jobs created or retained, and approved probably by now over $100 million in loans. Next slide. Yes, there we go. So in affordable housing, we finance rental and home ownership developments for nonprofit and for-profit developers, serving families, seniors, special needs, transitional and homeless, and veterans. We work on all phases of housing development, including land acquisition, building acquisition, construction, permanent financing, acquisition development, and bridge and gap financing. Next slide. We also do community facilities financing for a wide variety of nonprofit projects that serve low-income communities, which include health clinics, childcare centers, charter schools, homeless services, and office or program space. So nonprofit organizations, we could do building acquisition, construction, adaptive reuse, tenant improvements, bridge and gap financing, permanent financing, and also we closed our first new market tax credit deal where we were a participant in a source loan in a new market tax credit project that was a health clinic. So we're very proud of to expand our abilities with that. We're also looking at doing a couple of projects where we're going to do office buildings for nonprofit organizations. A couple of examples, next slide. This is Juniper Village. This is a project in Reno that we financed in 2015. It was a $740,000 permanent loan on a 9% tax credit project, 44 unit development with 9 special needs units. Next slide. We also worked in Boise, Idaho with the NeighborWorks Boise organization. We participated with Community Housing Capital. This was in 2018. We were part of a $6 million line of credit for land acquisition, lot development, construction of single family homes in Boise, Idaho. Our portion was $1.25 million. So as you can see, we have a lot of flexibility of what we could do. We do have a lot of loan products. I really like doing this type of lending because before I came to this organization, I had never done a land loan before. I'd never worked on a new market tax credit project before. So we have a lot of flexibility of what we could do. We do have a list of our loan products and some of the general terms. You want to grab one of these folders that's back in the corner where the orange side is, at the table over there. All that information is in there. Let's see, last slide, please. that's our team, Judge Harsma, Cindy Williams, and myself. Feel free to contact any one of them. Chances are you'll wind up with me at the end. So thank you very much.
With this mic or this mic? Oh, I'm sorry, I didn't.
You want to repeat everything you just
Yeah,
said?
can you
John?
just, we'll start over again. Let's a do-over. Okay, we'll use other mics for, thank you, John.
Sure.
Can you tell me what some of the advantages of using a CDFI are to finance affordable housing?
Sure. As I mentioned, we have some flexible loan products. We could do land acquisition, land loans, situation where somebody might need to take possession of land in order to submit a tax credit application or to apply for home funds or some other source of funding. So, we could put together facilities, bridge loans. I know that there were some organizations that might get a CDBG grant, and CDBG might pay on a reimbursement basis, so they already have to go ahead and spend the funds, but they need that money to pay the contractor, because contractor is not going to wait 60 days to get paid. So we could go ahead and do bridge loans on facilities like that. We could also do a little higher loan to value than your traditional lenders. And, a lot of cases we can go up to 90% loan to value on land loans and some permanent products. And also there's interest rate, what I call interest rate certainty. I think, you look at our rates, they're going to be a little higher than what I think a lot of lenders are right now. We don't get our funds from the capital markets. Our funding is pretty much fixed. We have our cost of funds and a spread. So we're going to be, anywhere from 25 to 75 basis points higher. But what I can tell you is that once we commit to your project and we tell you what the rate's going to be, that's it. It's locked in. There's no rate lock fees. The rate we quote you is the rate you're going to get, regardless of what happens to the markets. By the time you're ready to place that permanent loan. So I think those are some of the advantages of the CDFI.
Great. And I also want to acknowledge Brian Sagert from Clearinghouse CDFI, who's here, is also open for business, as well as Rocky Mountain CRC in the back, who are all great sources of financing for affordable housing. Do we have questions from the audience? Questions online, Katie? Or Kristen? Hi.
So my question is for Michael Holliday.
I'm going to have to repeat it because I don't think he can hear from there.
No, I can't.
So
I'm just wondering, going forward as you get this, I understand that you don't know yet whether the funding is going to be available for affordable housing. Governor spoke today, hopeful. But do you have any thoughts on how those funds would go out to?
and are we talking about ARPA funds?
Yeah.
So Mike, I'm sure you have a plan in place for how you're going to spend the $500 million of ARPA funds that are coming through the housing division.
Yeah, I'm going to pass that off to Steve. He's in the audience. I can actually see him. No, and quite honestly, we do know that the division will be involved in some way, shape, or form, but it's still pretty early. We're not sure how the funds are going to come in, and depending on the rules that come with those funds, they're going to lend themselves to leveraging with certain things and not leveraging with other things, and they could be used as standalone funds. So unfortunately, we don't have an update as of yet. We'll be working closely with all the shareholders though to figure out how we implement once we know what the division's role will be.
Yes.
From application to approval to funding, can any of you give me an average of how long it takes for that to happen? Each of your respective companies.
Well,
Yeah, how long the processing from application to approval for the various funding programs to funding?
It really depends on the type of project and how complicated it is. Quite honestly, if you're just doing a land acquisition loan, 6 to 8 weeks. But if you're going to do new construction and depending on how many units and what the construction period is and who the players are involved and how far you are in the process, if you have a tax credit allocation, if you don't have an allocation, if you're applying for soft money, if you don't get it and then you have to go to a plan B, you know, it could be, 9 months or so is probably, I think in my experience, is probably pretty good. 50% of the time you can do that, but it could easily go much longer.
Yeah, I would just add that most folks, what they do is there's a number of, applications you're applying for, right? It's the subsidy, it's the home loan, it's the 4% credits, 9% credits. And generally speaking, the equity and the debt on tax credit deals, like a 90-day process, maybe 120-day process from start to finish. So you would just line that up so that you receive all your approvals kind of concurrent. Obviously, you wouldn't start spending a bunch of money with, equity partner or debt until you know that you're going to get the other awards. But you generally try to line them up. I would tell you from our experience, if a project is shovel ready, we've gotten a project from start to finish in like 2 weeks before. That was a big complicated project and we hustled. We had a deadline but everything was done. We were stepping in for a different lender that pulled out. So there's a whole gamut between how long it takes, but I know that there's lenders out there and equity partners that can move quick if everything's done. So.
Yeah, that's our experience as well. It depends a little bit on where you are in the process. If everything is ready to go, we could probably do it in 90 or 120 days, but we often will get involved far before that during those early application rounds. We provide letters of support. We'll talk with you about the project, how you're structuring it, try to give some input that might help the process go more smoothly, even though it might be a year before you're actually ready to close. So we can get involved at any point.
And I would just add that there's a different critical path schedule for different financing programs, and that the bond program is actually Nevada is an incredibly developer friendly state for developing affordable housing using tax exempt bonds. The challenge is that in order to get a property tax exemption, you have to have HUD home funds as part of your financing. And really most affordable housing projects rely on having the property tax exemption. And so that process ends up being a longer critical path than the bond financing. So it's under the 9% tax credit program, a lot of the jurisdictions have a home round in the December, January timeframe. You apply for tax credits in May. Once you hear the award on the 9% tax credits in July, you give your architect the go ahead to start full design and you close the following spring. And that's a pretty typical for a 9% tax credit project, but it's a year, a minimum of a year from start to closing and starting construction on any project.
Hey, Eric, I can add on the bond program, we are averaging right now since 2014 from Board of Finance approval to close 186 days.
A lot of data there.
I'm numbers nerd.
More questions? Okay. Let me ask, first of all, what's the difference between LIBOR and SOFR, or do we care?
Go for it.
So is everybody familiar with those terms, LIBOR and SOFR? Those are our indexes. We formerly priced our loans off of the LIBOR index, which was more of a survey of banks, whereas SOFR is a compilation of rates. And so we are all I believe, I don't want to speak for you all, but we are switching over to quoting off of SOFR. It's intended to be less volatile and just more reliable. But practically speaking, currently the rates, the SOFR rate is very similar to the LIBOR rate in terms of the exact number, where it is right now. And so for our customers, we're not currently anticipating that it will make a big difference to you. I guess the only points to know are that no LIBOR transactions can close, no deals quoted off LIBOR can close after the end of this year. So as of next year, everything will be in SOFR or another index that a bank might use.
Yeah, and I would just add too that at some point LIBOR is going to go away. So and I can't remember, they keep pushing out the date. I want to say it's in
I
2023.
think it's June 2023. So if you currently have a loan outstanding that's quoted off LIBOR, that'll be fine as long as it matures or is refinanced before June 2023.
So just hurry up and build it and convert it.
More questions? Do you, I know that Fannie and Freddie have come forward with, I think an 11% increase this year in funding, and I don't know if that will affect the cost of funds for those products, if those are going to be more competitive, because they're needing to get more money out the door for affordable housing.
Yeah, so we saw, Fannie and Freddie are different in the way that they derive their rates. And so, basically Fannie has a guarantee and servicing fee that's on top of a market rate. So that, that they price a mortgage-backed security in the open market. That's a market rate, and they add guarantee and servicing on top of that. Freddie actually sets their rates to spread over the 10-year Treasury index. And so, Freddie, after that news came out that that their caps were published and they had to produce a certain amount of that as affordable housing, their spreads dropped. And so we did see that. And so that's just a index out there in the open market. I think most of the lenders out there are watching that to see where that rate is, how in comparison to how they price. So yeah, it's down, I think like 15-20 basis points, something like that. So.
And does CRA, I know on the equity side, investment is heavily driven by CRA, and I don't know on the debt side if that affects pricing or bank, I just don't follow that as much. And
I would say we're always keeping an eye on CRA needs and CRA targets. It is not a heavy driver of pricing for my group.
Yeah, I would say the exact same thing. It does tend to drive you to do things in certain markets that you maybe wouldn't do in other markets. Not that it's risky. It's just you're willing to do that land loan that you maybe wouldn't do in another market. Yeah, it's not a big driver for us. We do a lot of CRA lending. And so, I know that Wells Fargo is the same way. I mean, if you're actively doing a lot, you're not feeling any pressure to do more. But if there's a certain CRA market that's important to Wells Fargo or B of A or Citibank, then you'll find that maybe they'll do something a little extra there with respect to, credit exceptions, I guess.
One of the big issues we're facing right now is there's been extraordinary demand for private activity bonds since the 4% rate lock. And in Northern Nevada, where we have such a tight housing market, we're seeing a lot of activity. And I'm just curious, Michael, if there are plans in place for if we end up in a rationing situation, that we have Nevada has an unusual way of allocating their volume cap anyway, where half of it goes to local jurisdictions and half of it goes to business and industry, and there is no statute in Nevada that says that bonding has to go to affordable housing. So it could all be spent on economic development. And so we see a big role for advocates in sort of pushing all your local governments to allocate your volume cap locally for affordable housing when you can. So the housing division has more bonds, but I don't know what are the plans there, or what are you thinking, Michael?
Well, I think it depends on a couple of things, Eric, and you're right. It's getting busier than it has been since I've been here. Looking back at division's history, this is, almost as busy as it was back in the 2009, 10, 11. We're starting to see that many requests come in, but couple things. If some of the federal legislation passes that sets the threshold for tax exempt at 25% versus 50%, that's a game changer. That changes everything right off the bat, but I don't necessarily hold my breath on that. I think what we're going to do now is we're going to try and, we've been in first come, first serve because there's been plenty of bond cap. I think what we're going to try and do now is just put some more structure into what does that mean as far as getting applications in, timed out, so that people who get an application are really ready to go to Board of Finance and ready to close. That's kind of the first step, so we can get in my opinion, a more accurate representation of what the pipeline is. So that's the first thing. And then, as everyone may or may not know, the train project, the Brightline train project, is probably the biggest unknown for the division in figuring out how bond cap is going to look going forward. If that project doesn't come to fruition, we should be in pretty good shape. And again, you're right. I mean, there's no guarantee that the division is going to get a certain amount of cap, so that's an unknown for us as well. But typically, the industrial revenue development bond applications, and speaking with the director of business and industry, are, not as robust. They don't come in as often. So we kind of keep tabs with Mr. Director Reynolds from the department to see what he's got in his pipeline as well, so we can kind of anticipate how much bond cap might revert to the division. I think if we get to the point where we have to think about rationing, what we would probably do is, look at some kind of competitive process. I know Washington State does it, California, the states that I never thought Nevada would be lumped in with because they're much bigger than us. But I think we would work with the Advisory Committee on Housing to kind of come up with a process that they can help us, the division, determine what the priorities should be, because that's what's going to drive it. If the Advisory Committee on Housing recommended that the priority be new construction, then we could formulate a process such that those projects received a preference or were the priority. But I hope beyond hope, one of two things: one, that we get the reduction in the threshold; two, that we get a lot of bond cap; and three, that we keep having enough projects that this is an issue. That we're that busy and we're developing that much affordable housing. So some of those are good things, and some of them could be tough things. But I think that's probably how we would approach it. Right now, we're not there. I think we're in pretty good shape for next year. And it would depend on when and if the train project made a demand on private activity bonds.
Yes.
They're looking to come back to the bond market in April for the third time. They came the first time. Look forward to go ahead and host the 60-year birthday party just this evening. They go ahead and tie that. Project and raise funds. Make sure that project happens.
Thanks. Which project is that? Oh. Thank
Take over during the Halloween, the whole Orange County criminal union. I was there with Mandell, but so
yeah.
I was born to go to this guy talking about the bonds and governor's office. So this is a position and bond.
Thank you. Yes.
Chase early this year announced their business with small minority businesses. And most of the affordable housing space, a good percentage of residents tend to be Black and brown people. So are these banks willing to partner up with minority producers for these housing units, or do you have a direction that you're trying to do, or vote or anything?
Yeah, I can speak on behalf of Citibank. I don't have the exact number that we Oh,
Yeah, there was a question from the audience about minority participation in affordable housing and the ways the banks
Not just as consumers.
as developers and builders of affordable housing and the way the banks could be supporting that activity. Is that a,
Yeah.
okay.
yeah, so I don't have the exact number handy here, but Citibank did provide seed money for Black minority real estate developers. It was an emerging fund that we provided seed money for. Again, I don't have the exact number, but it's a high focus within Citibank. Absolutely.
Yeah, the same for Wells Fargo. We have started a number of initiatives, and I might point to my colleague Jane in the back who may have some more information, but you might want to speak with her after. But in terms of funds and also just funding Black and minority owned businesses to try to inspire that kind of development, Wells Fargo is very focused on it and has started to initiate those kinds of programs. We're doing it, but it takes time. These are funds that are just getting started.
No, I mean, we actually did. We launched it. We funded the money. The money's out. Again, I don't have that number handy, but I can get it to you though. Yeah.
And I think that there's a role for public agencies. I moved to Nevada from working in Pittsburgh and Boston, where there were very much more stringent MBEWV requirements for projects that had public funding in them. And I think Nevada has sort of been slower coming along there, but that's the way that we're used to is that it's coming from the public agency saying this is our expectation. And that's how it gets implemented in affordable housing. And so the developers are leading it as opposed to the banks.
The developers here, is the state participating? I mean, is that something the state is trying to do with the tax credit?
Oh, I'm sorry, Michael. There was a question about what the state is doing to support MBWB participation in affordable housing.
Yeah, it's in the QAP, which governs the 9% project. I don't think there's anything that specifically addresses that, because right now the state wants as much affordable housing as we can get, and we'll work with any developer that comes through. But it's something that Director or Administrator Acroft could probably address directly. He's in the room, and if you maybe could catch the gentleman after the meeting.
So I actually have, so I was looking up the number. It was, $200 million is what we put out.
That's just for Nevada.
No, I mean, that was nationwide. Yeah, I mean, that was the initial seed, and I know that's we're actively looking at additional funds.
Yeah. Hi, Dora. What's that? Go on, Dora. Oh. Thank you.
Our company has been doing tax credit development in Nevada since 2001. We actually have 15 developments. It's under the auspices of CDPCN. CDPCN builds units and then they turn them over to us, which is a property management company, which is our sister company. And we're in the process of doing a development right now. 1501 Decatur that we were awarded credits for in May. And it is a Black company.
I don't mind. I need exercise.
Yeah, going back to availability of volume cap, I think a lot of the plans we have for using ARPA funds is as leverage for bond finance projects. And so if there isn't bonding authority, then we can't, that's sort of the plan of using it for housing production is not there. But beyond that, I think one of the things, almost all of the bond finance projects serve exclusively households at 60% of median income. If we have gap funding using state tax credits, using ARPA funds, those same projects could be serving people at 50% of AMI, 40, 30, And it's just a matter of money. And that's been the issue, is that these projects could be targeting more deeply like the 9% tax credit program if there were the funding through ARPA. And so that's one of the things we're hoping to see through. I'm on the board of the Nevada Housing Coalition. We talk about these things a lot. Do we have other questions? Yes, Lori. Yeah, I mean, I think. Yeah, that's the hope, is that the Bright Line will be funded not through the tax and bond program, but through the infrastructure bill, and that it won't, that basically it was 200 million of our 325 million allocation of bonds a year, which would have a big impact on other things the state could do. I think that's the hope. Other questions?
One more over here.
Yes. Dina. Yeah. So this is a great, so Dina from the Housing Authority asked if there will be specific set asides within the ARPA funds for different uses within the affordable housing, range. And I think that I encourage everyone to look at the plan that the Nevada House, the coalition that Nevada Housing Coalition participated in, put into the governor for $500 million for affordable housing, which had a number of 4 separate pools: preservation, production, support of home ownership, and land banking. And I think I would encourage folks to join Nevada Housing Coalition if you're not a member right now, and because we're tracking this very closely, and we expect to be advocates for housing as this goes on. But we don't know right now. I think that Clark County has put out its requests for proposals, and so they're entertaining proposals. Washoe County in the north has asked for proposals. What I'm encouraging our clients to do is to get on every single list you can and get as many irons in the fire, because we just don't know right now. During the Great Recession and ARA funds, there was an emphasis on finding shovel-ready projects. And there was I think the Housing Division did a great job of mixing and matching money to different projects to make sure that as many projects move forward as possible. And so in 2010, 2011, we were the only ones building that. Those were the only multifamily projects going forward in the whole state of Nevada, were those ARA-funded rental housing projects. Well, I want to thank folks for sitting through. I think we have more time, but it doesn't sound like there's any more questions at this point. And yes, Christine, because there's money here on stage, people just offering money.
What are your tips, or how can these organizations best come to you? What expectations do you have from finance?
So I would say that partnering with an existing developer, if you're bringing something to the table, like you have an insight on a piece of land, partnering with an existing developer that's done it before is probably going to be the smoothest way to go about it. Learning from their experience. There are lots of ins and outs. Construction is messy. The affordable housing process, applying for bonds, for credits, for home loan. It's a long process, and the folks that have done it before have the most experience. And so I've seen it work best when they partner with an existing seasoned developer and bring something to the table that they don't have. And I think most existing developers would love to do that.
Yeah, I agree. And also, maybe in addition to, or instead of a development consultant is a great idea. And also, feel free to reach out to us right at the beginning and say, like, what do I need to do? Where should I start? Do you know any developers that I might reach out to? What's a list of the successful developers in my market that use all the resources available to you, like us and others in your community.
Affordable housing, but that curve is quite, whereas you might have affordable housing that is 50% AMI, 80% AMI, go up to like 120% AMI. If you're calling affordable, like is so what's being done or is there for housing on the lower end of affordable housing, or that 50%
Yeah, so we affordable housing has a definition by head, and generally what we're talking about is deed restricted housing where rents are restricted below a certain level. Typically, tax credit is below 60% of AMI. HUD goes up to 80% of AMI, and some of their funding programs. Most of the affordable housing is below 60% of AMI. In order to develop more deeply, we need more money. We need our housing authorities to participate in Section 8 to provide more rental assistance for housing. Unfortunately, Nevada, as many of you know, Nevada has the least amount of housing serving people below 30% of AMI of any state in the whole country. We have 17 units for every 100 households, and the median around the country is 35 units. And that's because Nevada has a lot of people on fixed income, a lot of service employees. We got less federal largesse, because we grew later than when a lot of those HUD programs were in place. And so, but I think that our hope is that the ARPA funds will allow us to target deeper on bond funded projects, because let's face it, our 9% program, we get $9 million a year of tax credits, and that builds 400 units at best for the whole state. And most of it's in Clark County. So that's not going to solve our affordable housing problems. And so if we can't use the other tools available and use them more effectively to target more deeply, we're not going to get there. But that's the nice thing is I think that the housing division has set a great precedent with using the GAP program to jumpstart our bond program, where we went many years from really before the Great Recession until 2015, we had very few new construction bond projects. And it was really the GAP program that allowed us to have production of hundreds of units at a time versus 40 or 60 unit projects, which is how the 9% program works.
I was just mentioning because the statement was made that, there's money on the stage. So if there's money on the stage and there's a great need that's out there, that's possibility if not the only entity in Las Vegas that is serving the underserved of, below 50% or 30%. Seeing that's why I had to figure out who to invest money on the stage.
Yeah. What's that? For veterans housing. That most of the Nevada housing, do you want to talk about that, Michael, about housing for veterans?
Sure, you bet. Almost, and my experience is more heavily on the 4% project, the bond project, but I think the 9% as well. Almost always they have a veterans preference. So even if it is just standard tax exempt bond housing, 60% AMI, they almost always have a preference for veterans so that veterans can actually find that housing first or move to the front of the line. But in exciting news, we just had a project approved by the Board of Finance on Tuesday that has 66 Veterans Affairs Supportive Housing vouchers. And those are for homeless veterans that will be able to actually pay no more than 30% of their rent, no matter what the restricted rent is. Those veterans will pay no more than 30%. That's a project here in Northern Nevada. And so I think there have been more VASH vouchers that have come out on some of the legislation over the last year and a half. So I think there are more and more solutions to help house veterans, but very proud to say the division has requested all our projects have that veterans preference.
Yes.
We have a question from the chat asking lenders to please address loans for rural housing projects, typically under 50 units with small term loans and small light tech equity amounts.
That sounds like your product, Mike.
Which of you have an appetite for rural projects? It's far rural, not just 30 minutes from radio.
NewWest Community Capital has an appetite for such projects.
And Wells Fargo as well we've worked with the Nevada Rural Housing Authority on a couple of projects in the last several years. And so we're always happy to look at rural projects.
Great. And if you could just repeat the question to the person.
Yeah, no, and so there's a question of sources of financing for rural housing projects, and that both NewWest Community Capital, Wells Fargo participate in rural projects. We are the main funding program for rural rental housing is the USDA 515 program, which there have been no new 515 projects in many years, but those projects that have rental assistance are extraordinarily valuable in the state of Nevada. And so there's been a lot of money funded to preserve that housing because it's so valuable to the state. We've also worked with on the USDA 538 program, which is a loan guarantee program in rural areas. And that's a good source of 40-year permanent financing, slightly below market rate permanent financing. And I think that the challenge in developing rural projects in general is that Nevada, we're the most urbanized state in the nation, that our rural communities are very small. And so the need there are for relatively small size projects generally. And so it's hard to finance those. They're always labors of love. And typically they work much better with rental assistance than just straight market rate, because we still have the issue of boom and bust cycles in Nevada that makes it hard for conventional banks to get involved in that. Sorry, that? I think so. That's California. I don't know California too well. Any other questions? All right, I want to thank you for coming. We'll wrap this up, give folks a hand. Thank you.